Hi, welcome to the market alert for Tuesday the 23rd of May 2017. So yesterday the Dow fairly quiet, to be expected as the market waits for tomorrow's FOMC announcement at 7 PM BST. So here you've got a situation where the market put in a sell, started to move lower, but then failed to do so. And as I sent out in my message yesterday, the market came down and had a look at this level on several occasions. There was this time, this bar, and this bar, and failed to close below it, which is why I sent the note out saying watch out, the market's likely to move back to the upside, having failed to close following the 4 attempts to get back below the entry price there. You can see the market became sideways for the remainder of the session, and there you can see how sideways it actually was. In the daily charts, you can see the market yesterday breaking through the 20,859 that I mentioned. It did this in the pre-market session, so price is higher there, trading up towards the 76% retracement level there. No volume, it's disappeared after the shakeout of Wednesday last week and Thursday, when we saw the market starting to recover there. News-wise today, there's a lot out today, particularly in the European arena. We've got flash marketing, manufacturing, services, German climate, public sector, net borrowing from the UK at 9:30, medium impact inflation report hearings at 10 AM, and FOMC member speaking then from 2. New home sales, FOMC member Kashkari again, Harker's out. They're bringing all of them out this week. Anything to keep the market on the highs at the moment is what you're seeing there. And then we've got the big gun tomorrow with Yellen and the FOMC minutes, but not a live one. That's next month in June. And it seems at the moment that the increase in interest rates has gone off the boil a bit at the moment. So we'll see as we go through June how things pan out. But at the moment, I expect the market to be sideways. It's Tuesday as well. I don't trade it Tuesday evenings. For those of you that have been with me for a while know. Those of you who are new, I'm not at the desk on Tuesday evenings. Tuesday, the first hour is generally the best time, and if that's quiet, then the rest of the session is generally quiet as well. It can be an odd day because the market's factored in the news over the weekend on a Monday, and that was quiet yesterday. Plus, you've got the added effect of the FOMC meeting minutes for tomorrow night as well. On the pound, this put in a buy signal yesterday, and again fairly quiet, obviously because we're in the election or pre-election cycle, but it managed to put in a 20-point scalp. It took an awful long time, given that these are 15-minute price bars as well, before the market eventually went up and traded to these levels. So watch out for signals around the 10 AM inflation report, because that one is a major impact news item, but it should be favourable to the pound if inflation reports come out as they have done of late, where they've shown an increase. And the reason for that, of course, is that there's the potential for increase in interest rates, which is positive for the pound. And then finally, implied volatility. This moving down to 8.59 from 8.86 from Friday. So again, no surprise really, as the market is becoming sideways once more. We've had the big spike up, and hopefully we were hoping, rather I should say, that it would continue to move in the direction up towards here before we found a new bottom and a decent correction in the market to get back to the buy side. But at the moment they're not allowing it to fall, as I keep going on about. So let's see what happens today, and with that we'll send out any reports as necessary. Other than that, thanks for watching. See you in the next one.